This is London with MarketHedge. I want to focus on the 4-hourly Bitcoin chart. I want to talk about hedging. Now, we're going to talk about hedging the 20 moving average right now. Hedging the 20 moving average, which would be the midline of the Bollinger Band, right? That's the measured line from which that second standard deviation to the upside and the downside are measured, which formulates the Bollinger Band. You guys know that. Now, what I'm interested in are hedges. Okay, that means I'm going to stack longs under the specific 20 moving average, and I'm going to stack shorts over the 20 moving average. Why would I do that? Because I'm planning, if I were to hedge that 20 moving average, on capturing value in the longs, right? And the return pays to that 20 moving average. Same thing with the shorts. Up and over, I get paid on the return if I'm stacking shorts over. So stacking longs under, paid on the return. Here, quick pay on the return, paid on the return, every one of these. Picking up the longs. What are we doing now? Well, we'd be picking up the shorts. So just so that you understand my vocabulary, okay, the technical vocabulary, execution vocabulary, when I am talking about hedging the 20 moving average on the 4-hourly, this is precisely what I am talking about in terms of stacking longs under. And now why would we stack them? Well, we don't know exactly the degree to which Bitcoin will go over or under, right? And we want to grab the absolute low. We want to grab the absolute high. Now, I'd say the biggest risk involved in this, first of all, what pays? Always the return to the 20. Always the return to the 20. Now, in terms of this, the risk is what? Well, you've got to have some sort of threshold maximum on your specific trade table to look at and say, hey, at some point this may go up and over and leave the 20 moving average behind. That's exactly what it did here. So you have to be plugged into, and remember, this is where I stacked 100 longs here, picked up 40 longs here, right? Really covering that entire area. Look at what happened. We caught that entire area below, up through, or down to that lower Bollinger Band. All of these green orders picked up. This bright green orders picked up. And what happened? I held them because we were doing what? We were breaking out of a bull flag. You guys got it. So in the context to say, well, and of course now looking at this 20 moving average here, I just want to explain this to you, the rationale of, and anytime you see price going sideways, just think about the fact that, well, traders are getting paid on that midline short, right? Stacked shorts over, stacked longs under. And what does that mean? Well, it's the asymmetric trade essentially, which is the hedge. Hedging what? That mid-line. So just a little bit of a walk through our vocabulary, through my vocabulary, so you can understand when you see price action that just seems real miserable like this, going sideways on Bitcoin, people are getting paid. They're hedging the 20 moving average on that 4-hourly time frame. Pay attention to that. I want you guys to be plugged in. This is London, former hedge fund owner, private, non-SEC, not financial advice. Now, in terms of the upside here, remember on that daily chart, I'm still looking for the higher, guys. I still want that 135 before closing the trades. Got some great trades ongoing now, but that perfect bull flag, you don't get a bull flag looking that nice. Move to the upside, downward sloping channel. I want to see the repeat of that flagpole all the way up. That's going to require price to get to 130 to 135. I am prepared. Okay, I'm prepared for a hit back. However, I just am. And if you're in a long, be prepared for this. Don't let it be a big surprise. If, for instance, this specific preceding flat top resistance that is included here were to get retouched. Why? Well, you can bet that in the context of this inverse head and shoulder that we had, remember this formation, the left shoulder, the head, the right shoulder, what got hedged? That top side resistance, that inverse head and shoulders, and that neckline as traders stacked in, right? They stacked in shorts. Why would they stack it in again? Because they don't know if it's going to go to the 23.6, the 38.2, the 50%, the golden pocket, 7.86, or the full completion. They don't know, so they've got to catch it for that return, right? Catch it for the return. You got it. Catch it for the return, and it also assists in that you're not overexposed all at once here, or all at once at any level. Thus, an additional component of hedging, meaning pulling back some margin from your overall exposure and not going all in at once. So that 130, 135 is my go-to level. With that said, I'm prepared to eat some of this profit up if we do crash down. Momentum is in the wind. It just should be. Bulls should be able to complete a perfect bull flag, in my opinion. And that's just what it is, guys. Take it for what it is. I want to shout out to our development team with MarketHedge Pro. We are currently in and formulating, guys, in the dev mode for our chat rooms and our trade rooms. So you can see kind of just a quick preview here on the left. We're almost set up, just almost set up. It's going to be another few days, maybe towards the end of the week, hoping to get this rolled out so that we can all enjoy it. Shout out to J-Mac, shout out to Luke, all the VIP, Chris, Flaz. Hope all you guys are doing well. If you're new and you're curious about what's going on in this channel, I'll tell you, it's the hottest group, most fun trade team that I have found on the internet. I'm pleased to be a part of it and can't wait to get it back together. And we'll be back on those trade rooms in the back with a brand new MarketHedge.pro. This is London. Shout out also to the BTCC crew. We appreciate all the trading API through the back end of MarketHedge.pro. Guys, the exchange has never been hacked. Take it to the bank. It's just a fact. So all these trades are executable through BTCC exchange. So shout out to those guys. International. This is London with Market Hedge. Let's see if we get more hedging on the specific 4-hourly. What is it? 20 moving average. You guys got the vernacular now. You got the lingo. You understand, right? We'll get into more of this as the weeks progress. Looking forward to a great closeout of the summer here. Hope you guys are having fun with your family and friends. Go get them. Let's go Bitcoin. This is London. Take care. Bye-bye.